Led in sports world shutdown, NHL delay possible restart day, Cineplex closing theaters across Canada, Good Life Fitness close out clubs amid coronavirus outbreak, Ontario declared a state of emergency on Tuesday, closing our bars and restaurants. So due to coronavirus, my YouTube channel will delay the restart day after 2021. Oh wait, the camera's on? Just kidding. So seriously, what's actually fun that's still open? LCBO and beer store to remain open. That's helpful. We need alcohol to sanitize our mind and system. If you want to invest but don't know how to invest in a crash, or you're wondering what's the difference between Canadian and US stocks, or do you want to learn more about Canadian stocks and start investing, this video is for you. Hello everyone, it's Cody here. In this video, I'll tell you step by step how to invest in recession-proof Canadian stocks. Thanks to my friend Kevin who inspired me to share this video during this huge market sell-off. I'll also share my top 3 Canadian stock pick in 2020 at the end of this video. So if you want to know, remember to stay until the end of the video. If this video is helpful, don't forget to destroy the like button. If this is your first time on my channel is mainly to share about stocks investing, personal finance, and real estate investing. If you're interested, please remember to subscribe to this channel and click the notification bell next to it so you'll never miss any video. Let's get right at it. I'll sum up what's happening in the market in 60 seconds beginning now. Stock investment has a very well ride recently. We experienced record gains and record loss. And we even experienced market halts more than once in a week. We have the longest running bull market in the history, but things can happen very fast. Within a month, we're inching closer and closer to a bear market and potentially a recession. However, more than 95% of subscribers don't smash the like button for the YouTube algorithm. Up until this point, I can almost 100% guess the market sentiment just by looking at these dudes' faces on CNBC headlines. This, and this. It's not to say that I have the crystal ball, but it's pretty obvious from their facial expression. Hey, I'm not complaining as these facial expressions has continued to inspire my YouTube thumbnail faces. Now that we've seen enough of these emotional headlines, we will talk about the difference between Canadian and US stock market. The Canadian stock market, as denoted by Toronto Stock Exchange, is approximately 1/10 of the size of US stock market. Because market capitalization in the TSX dropped off sharply, the Canadian stock is far less diversified than the US stock market, and is highly dependent on just 3 sectors: financials, energy, and materials. Oh, I almost forgot about the industrial, so it's 4th sector. Therefore, an investor who purchases only Canadian security might have insufficient diversification. Or do we? I'll share this in the future video. My top 3 stocks in 2020. Here comes the most anticipated section of my video. What's my top 3 Canadian stocks in 2020? They all have to provide essential needs for us even in the market like today. I prefer to own stocks with strong dividend payout records. What is dividend? It is just like cash flow you receive from your rental property, or interest you generate from your saving account. Can it change? Yes, it can change anytime. That's why we look for companies with a strong dividend history who weather through the toughest financial timing like 2008. Therefore, it's more likely for them to sustain and keep increasing their dividend payment during the time we're in right now. If you want to learn more about why cash flow is so important in a time like this, listen to this video. I have included the link above. So number 1, Toronto Dominion Bank. Here's the first stock I'm looking at, TD. I'll give you 5 reasons and a real life story. First, TD is my primary bank, so there you go. Just kidding. Second, let's start with the Canadian operation. TD's mortgage business continued to gain market shares, and wealth management division is excellent and well positioned to gain more asset under management. Third, it even has a solid insurance division. While many of its peers report a dip in earnings from their Canadian operation, TD was able to post a small gain in 2019. I recently saw a couple old car garage converted into a TD branded auto center. TD is vertically integrating their business to increase their profit margin. Next is the company's US operation, which includes retail banking along the East Coast and a substantial investment in TD Ameritrade. Last but not least, thanks to the weakness in TD's share price, the dividend just crept up to a 7.3% yield as of this morning. This is a rare occurrence. TD currently has a 9-year of increasing their dividend. Yes, there goes my cheat sheet. Also, a friend of mine was able to retire from his job by investing in TD back in 2008. At the price of $20 with historical high dividend, he's still regretting until today that he didn't sell his house to buy more. Stock number 2, Telus. I'll give you 4 reasons. First, Canada has 3 major wireless cell phone carriers. All 3 carriers, Bell, Rogers, and Telus, provide service to more than 97% of Canadians. So the market is dominated by these 3 mega companies. All 3 companies are well positioned for the new 5G technology for deployment. But Telus leads the pack with the fastest, largest, and most reliable network so far. Second, people claim that Telus customer service is better than Rogers or Bell. I still remember those days where I had to call in to Bell or Rogers to get my bill error changed. Well, when I call in, I ask them to match my price with their competitor. Yes, I like to do that because it's fun to negotiate. But at the same time, when Rogers and Bell kept transferring me from customer service department to billing department to customer retention department and to their manager, I feel I was really wasting my time. And at some point, I really feel like I just want to cancel my service. However, I'm still using Bell as home internet and Rogers as my mobile service, so I never really dealt with Telus customer service, and I'm not sure if it's better. So if anyone has a similar experience that has a better solution, please leave a comment below to benefit all the viewers, including myself. Sorry, I went off a bit of a tangent just now. If we look at them from the quantitative standpoint, they all have similar 4 PE ratio. If Telus haven't just split their stock 2-to-1, usually when a company split its share, the primary motive is to make their shares seem more affordable to small investor, even though the underlying value of the company has not changed. Number 4. Remember I mentioned the concept of dividend earlier in this video? Telus has been increasing their dividend for 15 years. This is sustaining through the 2008 financial crisis. Right now, the dividend is around 5.4%. Stock number 3, Enbridge. Now we come to my third favorite stock. Oh, by the way, these 3 stocks are not ranked in specific order. And now I'll give you 3 reasons why I like Enbridge. First, Enbridge dividend yield was attractive even before the coronavirus fears. Now with the stock plummeting, the yield was rising about 9.2% from 5.7% in mid-February. Also, it's worth mentioning that Enbridge has continued to increase their dividend for the past 24 years. Oops, did I just show you my cheat sheet again? Yeah, that's something for another time. Second, diversified portfolio. Although yield isn't the only metric we look at, Enbridge is Canada's largest natural gas distributor and is mainly responsible for moving 23% of total natural gas and 28% of North America total crude oil production. Let's take a closer look at the pipeline operation. Their operation covered gas pipelines and processing gas distribution, green power and transmission, liquid pipelines, and energy service. The contracts secured by the company for the 5 big segments are long-term and therefore cash flow will sustain the dividend payout. Enbridge's extensive network of distribution lines serving retail clients in Canada and the US give them a competitive advantage. No industrial rival can compete or match Enbridge's balanced and diversified portfolio. Last but not least, for those of you who still pay Enbridge bill every month and haven't found an alternative way to heat your home, wait for it, all hail Enbridge. To sum it up, I feel strongly about good growth dividend stocks like TD, Telus, and Enbridge, especially during a downturn in the market. Good quality stocks tend to fall less and rebound faster. Also, it generates cash flow from regular dividend payout to help you fruitfully weather the storm. In the future, if you want to see the same type of video on US stock, let me know in the comment section below. Hope you are investing carefully in a time like this. No one knows where the bottom is. But if you believe in the stocks you own, you can always buy more of the same stocks in batches as the price becomes more attractive. It's only the bottom when you run out of money. Anyways, thanks for watching. If you like video like this, destroy the like button below and subscribe and click the notification bell so you will not miss any video. And I often update my Instagram and Facebook, so you can follow me there. See you next time.